Good morning, everybody, and welcome to the Siler Wealth Management video blog. Today is Thursday, April 7th, and just so you know, when I do these video blogs, I do them twice a week. I really don't know what I'm going to talk about till basically 2 minutes before I turn on the camera. And I always have a lot of different ideas, and of course, politics comes to mind, and I try not to get too political because, quite frankly, I don't think there's a candidate worth a damn on either side of the aisle. So that's my feeling. I mean, I know we're going to have to vote for somebody, but they're all crappy, in my opinion. What blows me away was all the brilliant people in this country. We can't come up with somebody who can probably do the job right. And if I offend you guys on one side, I don't care if I offend you on the other side because I'm not taking sides. I'm saying that they're all horrible. Okay, that being said, I also have a problem with government regulation. I think that regulation is the downfall of this economy. And this is something that one side of the aisle continues to want to have more regulation. And I'm going to give you an example of something that's good, but yet what they're doing is they're treating the symptom, not solving the disease. Okay, so let's talk about what inversions are. And we talked about this last year, and I did this on one of my videos. But an inversion is when a company does a merger/acquisition, a domestic company, in this case Pfizer, does a merger/acquisition with a country home-based, or a company home-based at another country. In this case, Allergan. Allergan is based in Ireland. So what they're doing is an inversion. Of course, Pfizer's bigger than Allergan, but bottom line is they're pulling some kind of deal to circumvent the tax situation. So what's happening is Pfizer's going to end up being acquired by Allergan, and therefore Pfizer will be taxed, corporate tax, at a much lower rate. Ireland has really pro-business tax rates, and I think, and don't quote me, it's somewhere in the mid-teens, 15, 16% corporate tax, when we're in the mid-30s here in this country. So that absolutely ticks me off. I hate that companies, and I'm an Apple fan, I own Apple, I can't stand that they have $200 billion outside of this country when they can be putting it to work here. It's just sitting somewhere waiting for our government to change the laws. Okay, that being said, the government came out and blocked this deal. They said, you know what? We're not going to allow this to happen. Which, long term, I think it's a great thing because we want to keep, as taxpayers, hey, I'm paying my taxes here. I can't just pick up and move, or I guess I could, but I'm not going to. And they're trying to circumvent the tax situation by moving. So I'm glad the government did that. But I'm also ticked off that all of a sudden they're changing the rules midway through. It's like you're attempting a field goal and you move the goalpost. That's not supposed to happen. Sorry, so the Justice Department is doing this, which, again, in my opinion, unconstitutional. I'm glad it's being done. So you know how I'm saying it's kind of one of these things where it's a good thing. The government needs to solve this problem with inversions. That's why a lot of our workers, a lot of our workers, we could have a lot more workers if these companies were doing more hiring in this country instead of having facilities in Mexico and China and any of the Asian countries. If it was advantageous tax-wise, our economy would grow. And that is what you got to look for. For whoever candidate is saying, let's lower the corporate tax rate, because there's a lot of money outside of this country that is really starting with our country that can be brought in. So that ticks me off. Then, yesterday, the Department of Labor is getting their nose involved in retirement plans, in which it affects me slightly, but in getting their nose involved in retirement plans. So they're saying that advisors need to have more fiduciary responsibility. Okay, we already have fiduciary responsibility. They want more fiduciary responsibility. We already have, when you become a client of mine, there's paperwork this thick you have to sign. So again, this is just people in government coming up with ideas just to make themselves feel valuable, I guess. I don't know. We need less government, quite frankly. We don't need any more people on top of us. Anybody that owns a business knows that, okay? What they do is they sit around, and if this offends somebody, I'm sorry, but I think some of our government employees sit around mentally masturbating looking for ideas, and that's just wrong. Okay, I'm done with that. Now, the markets had a decent day yesterday, and the reason they had a decent day, healthcare finally had a rally, and healthcare, which I think is a really going to be a powerful, strong industry group for years to come, had a powerful rally led by biotechs. Now, biotechs are among, let's talk about a risk pyramid. I'm going to take one step back. Risk pyramid. Top of your risk pyramid, up here is the highest risk, down here is the lowest risk. So now let's take healthcare the healthcare risk pyramid, at the top of that risk pyramid is biotech. They're the most risky. And why is biotech the most risky? Because they really, for the most part, a lot of them do not make money. They're research and development type companies that are coming up with the next big thing that could try and hit the market and looking for FDA approval. So when people say, hey, you don't have to worry about biotech's missing earnings, and why is that? Well, because they don't have any for the most part. So they are really starting to get, and I saw that, I talked about this last week in one of my videos, or maybe 2 weeks ago. I said that I thought biotech's starting to get a little frisky. They are. They're starting to move now. When biotech start moving, they are big moves. So I own very little biotech right now. I may make a commitment more to them at some point. Not sure. Love healthcare. I think we need to make more of a commitment to healthcare at this point. I think that's going to be huge. It's going to be huge, huge. So energy also had a rally yesterday. I think this rally is short-lived. We're just a little bit of a struggle here. It's really markets trying to go a little inch higher, but we had 2 bad days and we have an up day. So I think the trend is changing, that we're going to have a little bit, a few more down days here. And I do foresee the markets pulling back or just really vacillating in a really narrow range for April. But I don't see a lot of money being made. So what you have to do to make money in this market, find things that pay good dividends, find investments that are not correlated to the stock market, and find sectors, because when the markets go down, not every single sector goes down. When the markets are going down, sometimes, hey, gold is going up. So let's try and find that sector. I think that sector could be healthcare. If you need ideas in the healthcare sector, I've got a plethora of ideas that I can share with you, but you have to just contact me. I'm not going to blurt out recommendations because that is not what I do on this social media network, because maybe somebody, a regulator, is watching and I don't care, okay? That being said, again, it's done. I'm done for the day. Thank you. I'm not going to give away a cruise today. I just don't have time. I have a lot going on. I will do it on Tuesday, I promise. I'll give away 2 more on Tuesday. But share my video. Please share my video, like our video, and spread the word. A lot of great information on here. IRAs. Today is, what did I say? It was the 7th, okay? You have till the 18th, but you do not have to the 18th in my office. I will not do that. The 18th, I believe, is on a Monday. Okay. Try and get to us on the 14th or the 15th or sooner to make your IRA contribution. $6,500 if you're 50 and over, 49 and under. Did I say 55? 5,500 for 49 and under, 65 for 50 and over. All right. Make that contribution, and you may be able to get a tax deduction. You can also do Roth IRAs as well, but we're doing a lot of IRAs, and people are calling, and really, this is really working. I really appreciate everybody. So share the video. You can reach my office, 407-831-8002. I'll post a number on the brief summary of this video. Thank you very much for sharing. Continue to do so. You guys are awesome. I'm Lee Seiler, Seiler Wealth Management, the Stock Doctor, stockdoctor.com. I've put it through approval. It's going to go live. Literally, it could be today. I don't know, but I'll let you know. Some really good resources on there. Everybody, have a fantastic day and a great weekend.